for my delay. I was sitting downstairs thinking that we were very much more delayed than we actually are, and of course you guys were waiting for me up here, so apologies for that. Our container panel discussion, just very quickly by way of introduction, we see the container markets continue to fluctuate across all sectors with very little by way of trends being formed. I think that's safe to say. We also see utilization rates continue to rise with very few areas or sectors remaining idle. On the new build side, we see that some considerable sense is being shown, and new build activity appears to be low, or certainly the demand supply imbalance is being corrected. And then as a general view of the market, we see continued consolidation amongst the players. We see new players emerging in different centers of gravity in different jurisdictions. So the move from German ownership to other jurisdictions is, if anything, accelerating. We see very much in the way of new financial structures coming into the container markets as well, increasing of lease activities. Change of markets, production hubs shifting to markets and different methodologies which the container operators have to put into their plans. The unstoppable rise of the internet giants, and something I come back to during these questions, the Amazons and the Alibabas and the big logistics companies, they're getting more and more involved in this space and showing interest that they want to get involved in this space. And of course, last but not least, increased IT, technology, digitalization demands on the container owners and line operators. So huge amount of challenges, huge amount of issues to be dealt with. To make some sense of this, we have Howard Finkel on my left, who is the Executive Vice President of COSCO Shipping for North America. We have Tasos Aslidis, CFO of Euroseas, to his left, and then finally at the end we have Mr. Ian Walker, who I'm sure you know from previous conferences, CEO of Global Ship Lease. Now, I'm going to be asking a number of questions. The panelists have received these questions in advance, but not knowing who's going to get what. And I would encourage the panelists as well to enter into a debate. Don't think because you haven't been picked on by a question that you can't contribute, because I think the more of a debate it becomes, the better. And we saw a number of really good debates this morning. To start off with a hot topic, and one that engendered a quite considerable amount of debate in one of this morning's panels, to scrub or not to scrub, that's the question. Thoughts from the panelists. Are scrubbers as relevant in the container sector as in other sectors, or are we shifting more and more towards LNG? And I'd start with Ian with that first question.
Thank you. I mean, yes, I want to forget the scrubber part, go back and look at emission control in 2020, and clearly it's just as relevant for us as every other sector, and it's kind of the right thing to do from an environmental perspective. I'm not going to be able to tell you anything that you don't already know. The percentage of the container ship fleet that is going to be scrubber ready for 2020 is small, 5% maybe. Therefore, 95% of the container ship fleet is going to comply, it has to comply, by burning low sulfur fuel. And yes, there is some, at the margins, some alternate fueled vessels, LNG vessels being built, but they really won't make a great deal of difference in the big picture. They make a difference to the operator who's operating those vessels, but not to the industry. So, is there going to be enough fuel? Is it going to be in the right place? How much more is it going to cost? Who's going to pay for it, etc.? Those debates continue. Most recently, and COSCO may have a view on this, but we've seen stuff in the press about the big lines beginning to talk with their customers about how to pass on the billion, the 2 billion of increased costs that they think they're going to suffer from burning low sulfur fuel. I guess we'll have to wait until 2020, 2021 to find out how successful that cost pass-through has been. Ultimately, someone has to bear that cost. I guess ultimately it's all of us in this room as consumers having to pay a little bit more for what we buy in the shops that has been made somewhere else.
There does seem to be in the container sector a greater willingness to look at optionality. Certain other sectors, there are very definite views. Yes, scrubbers are definitely the answer, but in the container markets, you're seeing some of the big lines saying, well, no, first of all, we're being flexible, and secondly, we're going to pass the cost to us on to the end consumer. Is that something that COSCO is seeing as well? Is that an attitude that COSCO has?
Yeah, that's a very timely question, because I can tell you right after this, I have to run back into our office to discuss with the president about a new bunker formula. It's not 100% clear. I think scrubbers are going to be used. A lot of the carriers, I know Maersk and MSC just came out with a new bunker formula. I'm not crazy about it. I don't think the shippers are. I don't think it's transparent enough. But something has to be done. The problem is when we collect anything and it's an increase in cost, we have a terrible time doing it. And in the past, in the United States, we still have the ability to, we have antitrust immunity to talk to our competitors, but it's not being used. Actually, the last forum for doing that was the TSA. We shut that down around a half a year ago. So the carriers are kind of working in the blind, making decisions where something like bunker, around 10 years ago when the bunker started really rising, carriers were putting bunkers into their rates and losing our shirts. Today, the TSA came out with a pretty good formula where we talked to the shippers and we got some agreement. I'd say 80% of the cargo we moved under a TSA bunker formula, but now there's no TSA and that bunker formula is horribly outdated. So, you know, yes, there's the scrubber issue is something that's on the table, but also collecting the right amount of bunker is on the table. And as I said, I'm going back to discuss this issue. I've been dealing with Platts in London. They seem to have something going. I'm going to take a very hard, cold look at it because I feel the bunker formulas that have been put out to the trade are really not what's needed yet. And I think the shippers have to have a say in it. And we'll see where we'll go from there. I could probably give you more information at 6 o'clock tonight.
Certainly, as a management company, we have to take a stance on this, and our stance is increasingly wait and see. You know, the price of scrubbers will inevitably come down, and options will increase, and we just don't know yet what the availability of low sulfur fuel and/or price will be. So wait and see is probably a sensible advice. Tasos, does that ring true with you, or what approach you're taking?
Yeah, this is exactly what the position we're taking. I think I agree with Ian that on the container sector, and especially on the feeder container sector, that Euroseas is active. A small percentage of ships will be equipped with scrubbers. So the competition really, the other owners would be on the same boat, and we will have to collectively deal with the trends as they are formed. If I can add something on Howard's comments, if there is a segment where owners and liners can come in some agreement with the shippers and agree on a formula to transfer the cost, is our sector in the container ships, especially the big ones, because there are fewer players on both sides, at least on the big scale, especially with Alibaba and Amazon that are coming up, as you implied in the beginning. That's an area where we can find some sort of common ground and the formula eventually be put in place.
But one further thought on this. You know, Euroseas and GSL focus on broadly the same ship category, mid-size and smaller. We both have ships in the short-term charter market and like to see that market as strong as possible. You could argue that if the only way that you're going to comply is by burning low sulfur fuel, you want to burn less of it. And the response in the past to high fuel price has been to slow steam. So in a high fuel cost environment driven by compliance, are we going to see the entire fleet slow steam? more than it is today, including small ships, which hitherto really haven't slow steamed so much. It's less effective with short sea journeys and so on, with more time in port. But if there is an increase in slow steaming, that will absorb capacity, it'll reduce supply, and therefore there'll be further tension in the supply-demand equation, which, all things equal, will drive up charter rates, which would be good for owners.
Just on that note, you know, to the ignorant, trade volumes continue to go up. Vessel oversupply has been checked to a certain extent and is reversed. But earnings, everything that you read from the big liner operators, earnings continue to decrease or disappoint. So what do you think is wrong from an investment point of view, from an investor point of view, with the model? Is there something wrong with the model of these liner companies? Howard?
It's hard for me to talk about the investment point of view. I could talk about the hardcore business point of view. Since OSRA, the Ocean Shipping Reform Act, carriers move 99.99% of cargo on contracts. And, you know, we were in a tremendously competitive environment with oversupply of vessels. As has been mentioned, the oversupply of vessels seems to have been checked for the moment. However, you never know what's coming around the corner. But in these contracts, there is so much, you could agree, first of all, the rates have been terrible. And this year was actually a good year for the spot market because the spot market rates have stayed up fairly high. But they're going on, if you look at 2018, the spot market in 2017 was pretty horrible. And at one point, when the spot market, they existed side by side, where if you were in the spot market, when things were really good, ships were full, you're going to pay a high rate, and when ships were empty, you paid the lowest rate. And the BCO market, beneficial cargo owners, basically had a contract, and that should have sat somewhere in the middle. But the BCO started paying a lot of attention to the spot market, and I think they tried to negotiate with the lowest spot level market rate, which was horrible. So along with very, very low rates, these contracts have ridiculous amounts of free time in them. Free time costs money. There's nothing free about free time. All sorts of giveaways, liability issues. It's kind of funny. One of my major responsibilities, I negotiate the terms on all our service contracts. And I can tell you, it just seems like I'm not an attorney by trade, but COSCO, when I first started working there, they had me look over a lot of what the attorneys were doing, and they said, "You look like you know what you're doing." So they used to send me to Lloyd's of London for maritime seminars and law, and now I do a lot of legal work for them. But I can't believe some of my competitors, that they let some of these contracts with these draconian terms get into the contracts.
Well, it sounds like the model is a little bit broken then, or stuck in...
It is. We need to break the model. We got to start new.
To dangerously oversimplify it, you can say that the liner model was to drive costs down at all costs. And they try to do it in two ways: by building bigger vessels, inevitably creating oversupply, and by encouraging efficiencies by doing alliances and eventually mergers. We have been in a continuous transition for the last so many years that I remember, definitely the last 10. If we are done with the cost cutting through building new ships, perhaps now the liner model comes in balance, and we'll see how it's going to work as an economic model, as opposed to being in a transitional phase.
Has consolidation worked? We've seen a lot of consolidation from the likes of from Maersk and CMA. We've seen one come into existence. Will we see two or three? And is consolidation the answer? Because it doesn't seem to be. It seemed to be the panacea of all ills for Maersk, but that seems to have been reversed as well, where profits are again down despite cost cutting, et cetera, et cetera. So is consolidation the answer? Ian?
Well, it's difficult for me to comment, not being inside liner companies, or at least not recently. Big question is what those results would have been if there hadn't have been consolidation and there hadn't have been cost cutting. I know it's clear that cost-saving opportunities exist either by legal consolidation, mergers, acquisitions, or by contractual consolidation through the alliances which Tasos just mentioned, which are designed to manage capacity effectively and reduce the cost of running the ship system. Going back 15, 20 years, I was in a liner company. We did consolidate, and we were very successful at it by taking out significant amounts of costs from ship networks, from landside infrastructure, from supplier contracts. And I'm sure that continues today with the big consolidations and the small ones that we've seen. Is there more to come? Very difficult to tell. Is it the answer? No, but it is an answer toward cost efficiency and therefore improved profitability. As I say, we're not in a laboratory. We can't run controls on with and without consolidation, but I have to think that it by and large is a good thing for the industry to manage capacity better with fewer large players. But it's still pretty disaggregated as an industry. If you look at the top 5 or 10, it's still pretty broad in terms of managed capacity.
Another way, if I can add, to achieve lower costs and position competitively is the vertical integration that certain companies are pursuing and could pursue more. For example, Maersk, and also with the presence of big shippers, again, going back to your theme of earlier, there might be more logic and more need to vertical integrate from the shipper, from the commodity shipper to the liner, to the port terminals. So along with data use and digitization, I mean, everything seems to be coming together. You can have two lines of cost efficiencies, consolidation to the extent there is more to happen, and vertical integration.
That kind of takes the wind out the sail, which was, given that we have seen huge cost cutting by these liner companies, and we're probably pared right down to the bone. How else can these companies achieve scale? How else can they optimize the services? And Tasos, you quite rightly say verticalization, but any other ideas of how the companies might achieve scale? Howard?
There's a lot of different ways. I think Maersk really stepped out in front and tried to offer the trade optimum services for premium prices. I remember the Daily Maersk, and that seemed like a great idea, and we were very all interested in it. At the end of the day, the shippers are only interested in the right side of the menu, the price. I can tell you we started really discussing service with shippers and try to get service into the service contract so we could actually charge more for excellent service. One major company, whose name shall not be mentioned, said, okay, we're going to give you, this is your rate, let's just say it wasn't the rate, but let's say it's from China to the West Coast, we're going to give you $2,000, and if you meet everything in our criteria here as far as ships on time, clean equipment, documentation, we're going to give you a bonus every quarter of $200, which is great. That whole year we met the bonuses and we did very well. Next year the contract came out, that clause was out of it. We just have to do a better job of looking at what the contracts are, negotiating the contracts. As far as consolidation, we were kind of lucky. Our consolidations, we're not supposed to say merge, but we kind of merged with China Shipping. Now, China Shipping, a lot of the executives were COSCO executives, so there was a lot of similarities. But when it came to my desk, when we had all these new salespeople, and I had all these new contracts that were signed with China Shipping, terrible terms that the rate didn't look bad, but the give backs with free time liability issues killed it. And we were lucky, I was lucky to take some of those out in the next go-around. But the carriers have to go out and really start selling service and looking at what they're signing in these contracts, because this year, we're going to get higher rates than we got in 2018 or 2019, but...
Can I just interrupt there? I mean, you're talking there about doing what you do better, but I think looking at the major liner companies, yours included, they're pretty much doing what they're doing at a very well and very pared down. What I was looking at more was, do we have to do, or do you have to do things completely differently? And this is where Tasos was coming at the sort of the vertical structures. How else, apart from doing things better, do these liner companies achieve scale? And it may be IT, or it may be the type of commercial platforms that Maersk are now looking at to integrate the whole process, literally from the seller's door to the buyer's door, and taking control of that. But Ian, do you want to comment on that at all?
I don't know enough about it, frankly. So no, but I mean, there are major liner companies which are tying up with logistics providers and trying to create this vertical integration. Let's see how it works. But fundamentally, the companies, liner companies, ship owners' results are driven by revenues, and revenues are driven by the spot market, which is driven by supply and demand. As you said in your introduction, Mark, on the ship owning, chartering out side, with an order book that's under control, a mid-size and small container ship fleet, which is by and large representative of the charter market, contracting over the last few years rather than expanding as scrappings have exceeded new deliveries, and demand, as you said, growing in the trade lanes that use those sorts of ships. We've seen supply and demand come into balance with a low idle fleet, and charter rates and asset values have moved up. They can move up more. The liner companies still have an oversupply of very large ships, which they built to get these scale economies, because it isn't a team game. If one major liner company builds 20,000 TEU ships, the others have to as well. It becomes an arms race. And in large measure, that's what's affecting the results on the big trades, Asia, Europe, and Asia into North America. So it still comes back to the fundamentals of managing supply, which is tough. It's always been tough to manage.
Tasos, do you see, or would you agree with the proposition that the winners in the liner companies of the future will be those companies with the most integratable, flexible IT platforms, and not just amongst their client base, but also perhaps within the vertical structures that you were talking about before?
Absolutely, I agree, and I fully believe in that. Every other article on blockchain you read, they give the containers industry, the container trade, as an example of where this new technology can be applied. I mean, from the little I know in that area, I mean, I've seen some companies taking steps towards that. Use of big data and all these new technologies will allow, especially liner companies, because they have a more complicated operational model as compared to us, to take to make full use of all this and to provide better service and different service to their clients.
And would you also, perhaps a question for Howard, would you also agree that perhaps the liner companies are also coming from a position behind the rest of the market? I don't mean that they have not done things they should have done in relation to investment, but because of the consolidation, because of the incompatible systems, they're starting from a point behind the rest of the market and have a certain degree of catch-up to do, and maybe that explains some of the lack of profitability at the moment that could otherwise be there.
Yeah, I'd say that's partially true. As mentioned, as far as IT and technology, no secret, I'd probably say Maersk is up ahead of some of the other carriers currently, but their efforts really have not borne fruit there. We're lucky now. COSCO now has purchased OOCL. OOCL, as far as technology, is way advanced. We bought their computer system years ago, and Ours kind of stayed where it was, and they kept developing theirs. So yeah, I think the industry as a whole is behind the 8 ball in technology and IT. However, when innovation comes out and is offered to the trade, it seems it's going to change eventually, but it's still, the trade seems to say, okay, you know, you can have all these great bells and whistles, and we can find out where our cargo is, and we can get documentation, and everything moves, and we can book blocks of cargo out. There's things like NYSE coming out, which looks like a good idea. But at the end of the day, the shippers are still looking at that low price. I think it'll be broken because right now the supply and demand is coming a little bit more into the carrier's favor, and I think we have to have some very serious talks with the shippers about how we move forward and what they need from us. They can give us ideas of what they need from us as far as technology, but what we need financially to become viable companies.
Tasos, do you see the Amazons and the Alibabas that we talked about, and the large logistics companies with an appetite for these vertical structures? Do you see them as a threat or as an opportunity for the container industry? And the second part of that, do you potentially see the day where Amazon simply swallows up even the likes of Maersk as part of its vertical structure?
It's hard to say whether it's a threat or an opportunity. I would like to see it as an opportunity. In any event, I think Amazon would be, I view it as a consolidator of cargo, so there would be, it's a huge e-tailer in a sense, right? So, but they would need to position their wares near their demand, so they have to work out on this model and consolidate various commodities across the board, I guess, various finished goods, I presume. So that will change a little bit the way these goods are shipped. I would imagine there would be, Amazon and Alibaba would be on a more integrated model side, because it's not only the shipping part, which is the better defined piece of it. They would have to select depots where they can concentrate inventory, from which they would have other ways of transporting it to the final destination. That might involve land, air, or other ships. The feeder model might get some benefit from it in an area that me and Ian sort of are involved a bit. But so it's not clear whether it's a threat or an opportunity. A threat would be in the sense if there is less demand, everything becomes so efficient and less ships are needed. Opportunity if there are more ways to either employ ships or more broadly for society to find ways to deploy resources better.
Keeping with the theme, what are the present threats or challenges or even opportunities for the container shipping? I noticed on the front page of Financial Times this morning, the headline was that the Trump or the US-China trade war seems to be intensifying. Should we be looking at that as a threat to container shipping, or will it remain relatively unscathed from that? Over to you, Ian.
Well, it's difficult to say. I mean, like every industry, uncertainty is unwelcome, and trade wars, tariff wars, how you comply with IMO 2020, consolidation, Alibaba or Amazon, it's all uncertain, and we kind of don't like that. Are trade wars going to have a step change effect on the industry? Probably not, but who can tell? Our thesis is that there will be a modest effect. We think that effect will be reduced on the mid-sized and smaller trade lanes, which are feeders to the main east-west trade lanes, which would be more affected directly by tariff wars between China and North America or the US. So maybe where we play will be less directly affected. But it's tough to tell. I mean, our industry runs not only on sort of economics of supply and demand, but also sentiment. Everybody we speak to agrees that the fundamentals are supportive. Small order book, good demand growth, as I've just said. But we're seeing a slight softening in freight rates, in charter rates and asset values right now. Is that seasonal purely? Is it sentiment? Because it isn't fundamentals, we don't believe. So it's the uncertainty from trade wars, tariff wars, probably combined with seasonality.
Just last quick question for Howard. What's the sweet spot in the sector, in the container sector at the moment?
The sweet spot is, as far as I'm concerned, is this year we were able to keep the spot rate level up, and truthfully, it's kind of odd. This tariff issue and the trade war kind of helped that. Because people rush to get cargo on the vessels. Our ships have been full both ways. So we're going into a 2019 negotiating period at a fairly healthy spot level, and I think that's a start.
Brilliant. Thank you very much to my panel for their knowledgeable and incisive comments. Thank you very much for listening. Thank you.
Thank you, Mark. Thank you.